It's Thursday, the 12th of August 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Sean Aylmer. Commonwealth Bank unveils a whopping share buyback and a big profit, but are things about to get much tougher? That's our main story. Also coming up in today's podcast, Victoria's lockdown is extended while New South Wales COVID cases remain high. One of Australia's biggest insurers has a go at itself, and why digital funerals are in fashion. Then, stay listening for my chat to Tim Harley, an entrepreneur trying to tackle Australia's housing affordability crisis. But first, here's a brief look at markets. Inflation in the United States moderated last month, climbing 0.5%. Price rises have been a key risk for share markets, with traders nervous that recent jumps could lead to higher interest rates. But the figures released overnight suggest inflation was moderate and recent increases may be transitory. The CBA figure triggered a surge in cyclical stocks and away from technology companies. In early afternoon trading, the S&P 500 was up 0.2%, the Dow Jones Industrial Average was 0.5% higher, and the Nasdaq was down 0.2%. European markets were much stronger also, with London's FTSE closing 0.8% higher and the Stoxx Europe 600 up 0.4%. That makes it 8 days of gains for the region, reflecting confidence about the economic recovery. The S&P ASX 200 closed up 0.3% yesterday to 7,584 points, yet another record. Utility stocks led the way, while the energy and materials sectors also did well. Financial stocks outperformed on the back of the strong earnings result from Commonwealth Bank, more of that in a moment. At the other end of the spectrum, telcos and tech stocks were the worst performers. BHP finished the day 1.5% higher, while Rio Tinto was up 1.3%. James Hardie was higher again yesterday, rising 1.3% after Tuesday's strong earnings results. Investors really love that company at the moment. Some of the worst performers among the large caps were online property group REA, which fell 2.7%, property giant Goodman Group, which was down 2.5%, and Fisher & Paykel Healthcare and gaming machine manufacturer Aristocrat Leisure, which both finished more than 2% lower. Oil prices were up over the past 24 hours, reversing the sliding trend of previous days. It came as the White House called on OPEC to boost production to curb rising petrol prices in the US. Gold also rebounded overnight and is trading at a little under $1,750 an ounce, and the Aussie dollar is worth about 74 US cents. Australia's biggest company, the Commonwealth Bank, will return almost $10 billion to shareholders via buybacks and dividends after reporting a near 20% jump in cash profit to $8.7 billion. Strong demand for home and business loans underpinned the result, as did a big fall in provisions for bad loans. The bank's share price closed at a record high of $108.03 yesterday, up 1.4%. There's no company on the bourse that knows what's happening in the real economy better than Commonwealth Bank, thanks to its huge customer base and data on transactions. Chief Executive Matt Comyn said he expected the economy would contract during the current 3 months before bouncing back in the run-up to Christmas, once lockdowns are lifted. Since the outbreak of the Delta variant in Sydney, the bank has deferred 6,800 home loans and 240 business loans. That compares to last year, where it deferred almost 250,000 loans. The returns to shareholders will come in the forms of a $6 billion share buyback and $3.5 billion worth of dividends. For the full year, shareholders will receive a dividend yield of around 3.5%, which, of course, is better than sticking your money in a term deposit. It's a good result from CommBank. It's doing better than average in its lending products, it has plenty of cash, and it's been able to simplify its business. But low interest rates aren't good for bank profits, because they diminish the difference between lending and deposit rates. That gap is a big part of earnings. And Commonwealth Bank, like its peers, has to try and keep up with the Afterpays and Apples of the world. Until more recently, the banks had a stranglehold on people's money and spending. That's changing, and that's the challenge for Mr. Comyn and his big bank brethren. In a moment, the rest of the news you need to know this morning. In overseas news, the chance of Julian Assange being forced to face charges in the United States rose overnight after a court ruling expanded the scope of an appeal against a decision that said he should remain in the UK. Mr Assange, the Australian-born founder of WikiLeaks, who's been in the Ecuadorian embassy in London or a UK prison for more than a decade, is wanted over the release of classified information with the help of US Army intelligence officer Chelsea Manning. The Taliban has taken control of 3 more provincial capitals in Afghanistan, meaning it now has control of over more than 25% of major cities and 50% of rural communities. The US, which has spent $20 trillion in the country over the past 20 years, is due to withdraw in 3 weeks. And the Chinese Communist Party's anti-corruption watchdog has said the country should reduce business drinking and replace it with correct values. According to Bloomberg, the comments came in response to a sexual assault case involving Alibaba Group employees, and authorities said those who broke laws in the case would be punished strictly. It triggered a drop in alcohol-related stocks yesterday. Separately, the Culture Ministry said it planned to ban songs from karaoke bars that spread harmful information, particularly those that inspired drug-taking, gambling and religion. Locally, New South Wales Premier Gladys Berejiklian continued to flag the prospect of easing restrictions in September or October if 50% of the state's population had at least one jab. The state is on track to have 70% of its population vaccinated by October, although some easing restrictions in low-rate areas for people who have received a jab was likely before then. The state recorded 344 new locally acquired cases of COVID-19 yesterday, many of which were in the community while infectious. There were 2 more deaths, including a man in his 30s with pre-existing conditions. Melbourne's lockdown was extended by a week until next Thursday after 20 new cases were recorded in the state yesterday. Both Victoria and New South Wales have also introduced permits for people moving in the border bubble between the 2 states. Queensland recorded 4 new local cases of coronavirus yesterday, all related to the Indooroopilly cluster. The 3-day lockdown in Cairns ended last night. And the pickup in the pace of vaccination nationwide continued, with 250,000 jabs administered on Tuesday. 3,500 pharmacies will be able to administer vaccines from next week. Meanwhile, a Sydney man who had COVID-19 and travelled to Byron Bay in northern New South Wales despite the lockdown will be charged with breaching public health orders. The man's trip triggered the lockdown in and around Byron. The Westpac Melbourne Institute Survey of Consumer Confidence, released yesterday, showed that sentiment tumbled this month as the lockdowns in Greater Sydney, parts of regional New South Wales, Victoria and southeast Queensland hit people's mood. It comes on the back of the National Australia Bank Business Survey on Tuesday, which showed falling sentiment. It matters because when consumers are confident, they spend, and when businesses are upbeat, they invest. The surveys provide more reason to think that the economy will contract this quarter. AMP Capital Chief Economist Shane Oliver said he expected the economy to contract by 2.5% during the 3 months to the end of September. Insurer IAG said it lost $427 million last financial year, and its outgoing chair, Elizabeth Bryan, gave a fair old roasting to herself. The disappointing result was in part due to organisational and risk management failures, she said, including hundreds of millions of dollars in refunds being paid back to customers, underpayment of staff, and policy wording that didn't deal with the COVID pandemic. The group's share price closed down more than 2.5% yesterday. Swedish private equity group EQT has made another bid for listed financial services software group Iris, worth $3.2 billion. Iris has already rejected 2 bids. EQT now has 30 days to conduct exclusive due diligence on the company, which suggests the board is interested in the offer this time round. Iris' share price was up more than 5% yesterday and is up nearly 50% since the original offer back in June. British energy giant BP said Western Australia was well positioned for the large-scale production of green hydrogen and green ammonia, both highly regarded renewable energy sources. But development will require huge investments in ports, energy and water networks. The comments came after a feasibility study undertaken by BP, and as Origin Energy said it would work with shipping group Mitsui Osk Lines to create a supply chain for the export of green ammonia from its facility in Tasmania. Clean energy from Australia, sold to Asia, is a massive opportunity. but it is very, very expensive to set up. Brazilian meat giant JBS has made a $550 million offer to Huon Aquaculture, the Tasmanian salmon farming group, but Andrew Forrest, founder of Fortescue Metals and the country's second richest person behind Gina Rinehart, has built an 18% blocking stake. Mr. Forrest has written to both JBS and Huon, insisting they commit to higher farming and environmental standards. Mr. Forrest's Fortescue Metals is one of the largest users of non-renewable energy in the country, although he has committed the miner to becoming carbon neutral by 2030. The Reserve Bank of New Zealand has formally warned Westpac for failing to detect and report 8,000 international transactions over an 8-month period. The discovery was made by the central bank's anti-money laundering and counter-terrorism financial supervision team. It comes less than 12 months after the bank paid $1.3 billion for similar breaches in Australia. Cobram Estate hit the bourse yesterday. It's the olive company, and after the close, it was valued at $700 million. Cobram has benefited from COVID because many more people are cooking at home, and that's boosted revenue. It produces more than 70% of the country's olive oil and also operates in the United States, which is the world's largest olive oil market. Iron and lithium group Mineral Resources announced a strong profit for the 2021 financial year on higher revenue thanks to record iron ore sales. The group also announced a record dividend. While its share price fell 1% yesterday, Mineral Resources has been one of the best performing stocks this year. Since the beginning of December, its share price is up more than 80%. That's what happens when you mine two of the hottest commodities in the market at the moment. InvoCare is a funeral business which owns brands including White Lady Funerals and Simplicity Funerals. COVID hasn't been good to the company because lockdowns have prevented large gatherings of people at wakes, which is where it makes a fair chunk of its earnings. InvoCare's share price has struggled throughout the COVID period, but there is some good news. Digital memorials are on the rise. Its relatively new CEO, Oliver Chrétien, said live streaming of services will become more popular and younger mourners like digital memorials. Well, there you go. Stick around because up next is our daily interview. Today I'm talking to Tim Harley, a young entrepreneur who's trying to tackle the housing affordability crisis in Australia. Rent to own hasn't had much traction here in the past, but it's become very big business overseas. Now, though, it's harder than ever for first home buyers to get into the market, and Tim's company, Own Home, might be a solution. It's certainly got the attention of investors. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. It's Thursday, the 12th of August, 2021. I'm Sean Aylmer, I'm fully vaccinated, and that was Fear and Greed. Enjoy your day.